All right, buckle up because Kevin J. Moore is a name you need to know if you're even thinking about the wild world of venture capital. This guy's been navigating the private markets for over 16 years and knows the game inside and out. He's the founder and managing partner at Serac Ventures, leading the charge on cutting edge investments. But here's the kicker: he's not just doing venture capital, he's teaching it. His book, Starting Your Own Venture Investment Firm, a how to guide, is like a secret weapon for anyone brave enough to launch their own fund. Forget jargon and guesswork. Moore lays out the entire process from moving investors to nailing your investment strategy in a clear, actionable steps. Before Serac Ventures and becoming a published author, Kevin honed his skills at prestigious firms, gaining invaluable experience in the finance and investment field. He's seen the startup battlefield from both sides, giving him a unique perspective that shines through in his leadership and in his book. If you're serious about venture capital, Kevin J. Moore is your guide. Welcome to Impact Investing. I'm your host, Jeffrey J.P. Potvin, and today we're deep diving with Kevin J. Moore, who is your go-to guide for venture capital. As a founding and managing partner at Serac Ventures, he's been a private market investor for 16 years. He demystifies launching your own fund with his book, Starting with Your Own Venture Investment Fund, a how-to guide, sharing his insider knowledge on fundraising and investment strategies. With a background in finance and a passion for startups, Moore empowers the next generation of venture capitalists. We're very excited to have you here today. Man, I'm excited to talk with you because not only are you fantastic in this space, but you also written a book, and we're going to break into that book today because we want to figure out all these great nuggets that you've learned, but tie that right back into how the startup world works, because all this material really does align so nicely to how a startup should be looking at raising funds and how they should be operating. But before we get into that, Kevin, I'm going to turn it over to you. One thing about you that nobody would know, and maybe you can start with a bit of your background all the way from the days of Oklahoma State.
Perfect. Thank you so much for letting me be here. It's a pleasure. Maybe I'll just give a brief intro on my background. I feel like I'm a very non-traditional venture capitalist because I got my degree in civil engineering. I live in Oklahoma City, Oklahoma, right here in the middle of the United States. But I've been blessed with opportunities to do this wonderful job and to back a lot of different companies. And, I started out with this curiosity as a kid of entrepreneurship and what it meant. My first sort of experience selling things to try to make money was gathering items from around our house and putting them on our front yard to have a little garage sale. I was probably in the second or third grade when I did that. We also had an opportunity to sell candy. When I was in high school, we got candy and sold lollipops and Snickers bars to people throughout the school just to make a little bit of money. I remember when I graduated college and moved to Chicago, I started a t-shirt company called Urban Necessity. And we were selling urban clothing and artwork and all these different things, but just whatever you could do on the side to sort of scratch that itch. I graduated, moved to Chicago, was working as an engineer for a couple of years, knew this wasn't what I wasn't supposed to be doing. And then I graduated into or moved into financial services, thinking that this would be a launch pad for learning more and getting into venture capital eventually. So I did that for a few years, worked in financial services for 6 years, actually 8 years, and then moved into venture capital where I've worked now, both on the GP side as a GP investing in early stage companies and on the LP side investing into funds, and now running Serac Ventures, my own firm, taking all those learnings and doing what I'm doing now. So it's been a long journey, but a fun one.
That's a great story, and I was smiling because I literally was sharing this story a few days ago, where I was sharing about when I was a kid. My parents told me that I took all of my sandbox toys and went down to the beach and sold them all at the flea market. So when you were saying you were selling stuff around the house, apparently I was doing the same thing. So I thought there was an opportunity there to help. So I better go and make some money. And I was very, I guess it's, can't remember what the term would be called, but thrifty. So that's how I bought my parents' birthday gifts, was to retake my toys, sell them, and then maybe find something and rewrap that and give them it as a gift. So I guess our entrepreneurial spirit started really young.
We were enterprising young chaps.
We totally were. I love it. I'm sure there's other stories along the way that you kind of start to think about, like I did
Several.
this. Yeah, and it becomes more entertaining than anything because you don't even realize you're doing it, but you're like, I just needed a few bucks to do X. And whatever that X was, it made it interesting. But I can only imagine in your t shirt business, if you would have kept it going, who knows? Today, that could have been one of the largest urban t-shirt companies in Oklahoma or in Chicago area. Who knows? But it's funny how we don't always keep behind the drive of things that we're passionate for. We use them as a vehicle for the timing, and then we kind of keep moving on.
My wife and I talk about this all the time because it was our first year, our second full year of marriage, and we were both sort of just, we had a lot of free time. And this was at a time, and not to date myself, when e-commerce and online shopping wasn't really that big of a deal. But literally not too long after that, it just exploded, and it seemed to be the preferred way for people to get things. But you know, everything has its time and its place. It's just a learning experience. But I think the underlying thing that we're discussing here is the desire to do something independently. And venture capital and entrepreneurship and everything that people talk about on the show and what we see every day, JP, is that. And that is fun in and of itself.
I totally agree with that. And you have to start somewhere. And the cool thing is that your experiences and my experiences are, something really small, something gritty. You just went out and tried it to see what the outcome would be. You got the niche for it because now you figured out I can make money if I just try and do something. And it doesn't matter if it comes easily. It's just the fact that I have the switch that I can turn on and I can figure out how to balance things out when I need to. And I think when you kind of take back to some of your experience and the space that you worked in. What I liked about it is that one, you have that entrepreneurial side, and then you moved into the engineer to finance. And finance, I think this is probably something where almost it should be mandated across all education, school, and everywhere. Is that you somehow have to take a couple of years of how finance works. I think it's the most daunting, scariest thing to most. But you spent a good 8 years working in finance. Is there something there that you could say, I took these learnings and they've really impacted how I work with founders, how I work with people? And is it that every founder you work with is just gangbusters for numbers, or it's the complete opposite and you tend to be pushing them more on how to report and share back information to other GPs and LPs in their investments?
I like this question because the engineering side of me made it such that I was very comfortable working with numbers. So the financial side of it didn't bother me. What I learned probably the most working in financial services was how to work with people. And the best and easiest way into finance is if you're able and comfortable with selling. So that was something that was completely new to me, thinking about transitioning out of engineering into a role where it wasn't just about numbers, it was about people and the ability to develop relationships. And a lot of that has to do with business development. So whenever I left the engineering job and went to work in finance, that first role that I took was 100% commission. And I was selling a combination of insurance and investments. And one of the things that they taught us was about the statistics behind how you actually built a business, which were your clients, and just following the numbers and having the discipline to do that on a daily basis, like without without excuses. And that was really that was a challenge. And for a while there, I was getting into the office at 5:30 in the morning, sitting at my desk, just putting together and planning the day and figuring out how I'm going to get this activity done. But it literally was just no skill, just straight up discipline and hard work. And you're learning all the other things on the side about like how to invest and put together portfolios. But I think as it relates to venture capital, as a GP and as GPs, we are selling ourselves to investors. We're selling ourselves to founders. And there's different numbers that go along with that to ensure success. We are also, I also think that understanding the financial component of the industry writ large is you understand and see that they're intrinsically related. The public markets and the private markets, they all play together. And I don't think that I would have fully understood that had I not worked in financial services. I probably could have read it in a book somewhere, but having that experience of seeing a company go public and selling that and investors getting liquidity and portfolio construction, these are all sort of just ideas and frameworks that can be applied to whatever medium within sort of different industries, private equity, venture capital, hedge funds, whatever, that you kind of get familiar with and you start to implement when you have to do it and when you're building something like a venture capital firm for yourself. So I could talk a lot more about that because it is interesting, and I am very thankful for that experience.
I love it because you actually took a different angle on how the financial space benefited you than what I would have expected you to say. Like, hey, being in finance, I learned about those things, but you were already comfortable, you were already working in that mix. So you actually honed in on skills that, as you mentioned, you didn't have fully baked in, which was how do I communicate with people? How do I work with people? And then how do I build a framework so that I can sell? Because right now I'm working commission. And I love this because you literally took something that you already knew, stepped into a space that you weren't comfortable with, and you got thrown into the call it into the den because you literally had to learn everything all in one shot. You're like, I already know finance, but I don't know how to sell. I don't know how to sell in this type of environment. And if I don't sell, I don't get paid and I don't make any money. And this isn't going to be worth it to anybody. And you're obviously going newly married, you're going through all these things. So you've got a lot more costs and things that you have to step up to make sure you can manage. So I just love the fact that you took a different approach to it and said, I had to learn way different skills. And in that, those learning those skills are kind of what actually helped you move forward. And the biggest one, it sounds like, is you learned how to work within frameworks, which is putting together a process that was simple and clean. And the reason why I'm bringing this up is because when I was reading your book, which was fantastic, by the way, it's short and sweet, but it literally is a framework. Like you literally walk through it, and I'm going to give you some more pumps here. But the other thing I loved about it is that at the end of each chapter, you had actionable items. I think every book should have that. Like it's almost like a little synopsis of here's what you just read in case you forgot everything that you just read, and here's a couple of points that are really going to stand out. And start taking notes and make some action items here because this is how you're going to move forward. So I just love the fact that everything rounded out each time. So you built a framework on how you walk through each process to get to raising money. You walk through each process on how you are going to close a deal in your working in finance. So I just love that because the framework is what makes this work. If you have no framework, you'll just go in circles.
Yeah, absolutely. And I think that just going back to something you said earlier around, I felt like the book skills anybody can learn. You can learn those things. And I was interested in them and started to learn them before I even got into the business. But I think the art of the business is our ability to break down complicated things in ways that normal people can understand them, whether it's a founder, whether it's an investor, whether it's anybody. And I think that if you understand kind of the process of solving problems, like most people, especially in my previous life as an engineer, that's what we were taught to do. And processes and things of that sort where we followed those because we understood that it's the framework that sort of drives the outcome, not the other way around. And just to emphasize that even more, there are design principles, there are investment principles that apply. And if you can structure that in a way that it makes sense, it can be applied to anything. And I think this is one of the reasons why when I was working on the GP side and I went to work on the LP side, investing at a fund of funds, the medium to me was, it didn't really matter. It was the process of evaluating an opportunity, putting together a portfolio, understanding and doing the diligence, understanding who the stakeholders are, who's interested in investing in that strategy. Ultimately, my interests are investing into early stage companies, but having that perspective of seeing that side of the business has been tremendously beneficial as a GP. But again, as an investor, I think that that concept can be applied to anything, whether it's real estate, whether it's investing in the public markets, et cetera, et cetera. So frameworks are a really big thing to me.
And it shows, and I like I said, I really enjoyed walking through the framework. And as an engineer, my brain was like, maybe it was at peace. It was like, it's just it's so nicely divided and easy to work through. So I loved it. And kind of shifting from the finance space, and as you moved into LP, GP, angel space, just to dive into the book a bit more. There was a couple of concepts, say, in each area that I want to just touch briefly on, because I think it really relates to how startups operate. So, like, you could take your book and change everything from how to build a fund to how to build a startup, and it would be the exact same thing. So, I only take 10% royalty on that changeover of your book. So, basically, the
Done.
concept, the concept that I liked was, at the beginning, you talked about a thesis, and you said come up with a thesis. Well, for me, from a startup perspective, this is come up with your hypothesis on the problem you're trying to solve, which is identical to what that thesis is. And what I loved about your thesis, and I'm not sure if you had gone back and looked at this, is that you created three theses that you shared. This is what a thesis should look like, and they were so accurate. They were brilliant. They were perfect. So, like, cut and dry. You could not scurry around it. And that's the whole point of a thesis, is that it's supposed to take away all the fluff and just get you to the point. Um, Bitcoin usage will become ubiquitous, eliminating the need for cash for purchasing products, period. Add in some other words, but give or take,
Hmm.
this is
Hmm.
what you shared. And it's perfect because it literally says, my hypothesis is this, and I'm going to go after this because this is where I think is going to change the world. And then you focus on that. Maybe there's going to be pre and post comments that will circle around that thesis, but maybe you can talk a little bit about some of the learnings that you had from really refining this thesis, because it's like refining your hypothesis of your business. It's like one problem, one solution. And how do founders get their head around that better? Because you just showed that you can do that. And look, today where Bitcoin is, you wrote this in 2000, I'm assuming between 2016 and 2018 launch. And at that point, people probably didn't even know what Bitcoin was, to the point that they do today. And look how relevant that is getting because of that thesis. And if everything was invested in that category, would you have been a leader in that category for that comment? So it's pretty fascinating on how you derive this and then the outcome. And you added in a few elements like avoid large funds, and you came up with some elements that help you better focus this thesis. Can you share a little bit about why this is so crucial to a founder when they're building their company?
I think that whenever I'm talking with a founder, their thesis to me is important, certainly, but what's more important is their why behind it. And whenever you're looking at a market opportunity, I want to understand, how did you derive and come to that conclusion that that was going to be a profitable or will be a profitable sort of opportunity for you? And their ability to explain that reinforces their thesis. If the thesis is we're going to be living on the moon in 5 years because the planet Earth is going to be destroyed by climate change, okay, well, that's a great thesis, but tell me why you think that's going to happen. And the justification behind that is kind of more important than what the thesis is in general. But I think that it's just fundamental to, when you're asking somebody for money, Mr. or Mrs. Founder, having that thesis support is critically important. And I'm not a scientist, but again, back to the engineering days, we did have to justify mathematically and through our formulas, if you will, how that worked. And the formula for a founder might be their business model or their target market or their industry expertise or whatever it might be. It just so happens by happenstance that I've been studying Bitcoin. I own Bitcoin. Our fund doesn't really invest in sort of Bitcoin as it right now, but my thesis was I felt like that would be something that would be useful in the future, mainly more of the decentralization side of that. But I think those are just examples of things that I was thinking at the time when I wrote the book that I was sort of thinking about. And look, your thesis could be wrong, and there's no certainty that it's going to happen. But more importantly is the structure of, like, how did you develop that? In fact, as we were talking before the blog podcast, I was writing a blog about portfolio construction, which I'm going to post later today. And it wasn't so much that there's a wrong or right way to structure a venture capital portfolio or a wrong or right way to run a company, Mr. or Mrs. Founder. It's just like, what is the reasoning and the basis behind it? To me, that's what matters. And that's what gives an investor confidence to invest in you when you're talking to them about your company.
No, that's gold. I think it helps you align your brain to, as you mentioned, the why, but the justification to the point of what that thesis is. So if you can justify it and everybody else can believe in the way you've justified it, then people will want to invest because they will also believe the world is flat or the world is going to blow up in the next 5 years because you've created such an argument that it's almost inevitable that this will happen. Regardless if it does, you've created enough backdrop information, justified it, and you're proving your thesis. And regardless, you'll be the best at that category or that thesis and drive out as many businesses that will help sustain and fulfill that gap until you get to that 5 years and decide, okay, I built something great. Maybe the earth isn't going to go that way, but we've invented some great companies and we've got a lot of great companies in our portfolio. So now you kind of take that rounding side of things and you say, well, now that we started and we start to have these companies, we're investing in them, you go into metrics. And the metrics can be kind of opened up to many things. But I think this is where the shortcomings of founders are, is maybe it's on the numbers side, maybe it's the understanding side. But you talk about things like, well, how do I know you can prove to me that this is going to work? So you've got things from DPI to deal flow, how you're going to invest, types of founders. So is there a criteria that you look at today, and did it shift from 10 years ago? Because your learning's changed. So is it growing as well? Are you refining your process and saying, no, I don't like these founders, they keep failing. Nope, these ones keep being fraud. So I'm not looking for the blonde hair brush cut guys anymore. They're not doing it. So I'm going after the med school PhDs. Like, have you kind of continued to refine your KPIs and your metrics, just as a founder should when they're out pitching for money or for pitching in general?
For sure. One of the things that I think is important as an investor is to certainly you want to be in line with whatever trend is happening, but more than a trend, more sustainable trend. One of the things that we think about at Serac Ventures is investing in areas or into products or services that are going to always be in some sort of demand. And there's innovation that happens within those specific categories. For example, we believe that no matter what happens in our society, people are going to need access to financial services. There's going to be different tools and technologies that persist within those industries, but money makes the world go round and it's always going to be there. There's no fear in my mind that the fintech industry is going to fail and not be relevant. That's just, in my opinion, not going to happen. We don't invest in medicine, but I'm just giving another example. People are always going to have issues with their health, and it's always going to happen. So that category is always going to be there. However, fads change. So we're not investing in things that are temporary. So just as this relates to a founder, perhaps there's a period or window of time when things are more relevant than others. And you can look back in history across technology and see that happen. But also there's the opportunity to, not overthink things and create new categories that didn't exist before. And one of the things that I was reading in a book recently, or maybe listening somewhere, about how there's been some revolutionary founders who've created categories of technologies and products that there was no sort of what might this be, but they created new categories. When you think about Henry Ford, for example, Henry Ford created or sort of industrialized the automobile. But at that time, there was no infrastructure to support that. There were no like gas stations all over the country, service stations. How are you going to get fuel to different places? All of that stuff had to be created, that infrastructure for all those different things. But the automobile fundamentally changed the way that we travel, logistics, everything. So you don't have to figure out everything, but that's a new category defining technology. So we have to be careful not to sort of pigeonhole into places where, you know, there's all this certainty, but to be sort of optimistic and forward thinking about the things that are to come. I think AI is probably one of those as well. And that's another we could do a podcast just on that topic. But again, I think I'm getting the point across here.
No, agreed. And I think when you start to figure out what that fad is, it's like a bad shirt versus, it looks great today, but it's not going to look very good in a week or two once you've kind of got used to the bad colors or whatever it is. So it's the same idea. It's trying to figure out where that's going to take us, and will someone buy this, and will it be a staple product in the next 5 years, and will it be again in the 10 years from now? Or will that innovation go a step further? So you'll be obsolete in 5 years or 10 years because the technology is going to get picked up on, and it's going to be even different. There won't be vehicles anymore. It's just going to be flying, and it's going to happen that fast. And I see like Zuckerberg came out the other day saying that we're too attached to our mobile phones, but in 5 years we won't be even using phones. It'll be everywhere we go. We're going to pick up on glass, and the glass is going to tell us who we are and what we need to see, and only we'll be able to see it. So there's going to be this shift that they're now trying to put out there because they want people to start believing that my mobile phone, I don't like it, and then all of a sudden this new tech's going to come out. It'll be Google Glass or whatever, Meta Glass. But the whole idea is I have to start feeding the brain today so that you start to believe it, so that in the next 5 years you'll want to remove this phone because it's nothing but cumbersome. So they'll start to sell that through so they can have a new category and open up the door for something bigger. So you start to tie in these facets of sales techniques, how you get the deal flow, how you as a startup is going to generate and make this a business. And then some of the other things you touch on, which again, I think this is something that's got to be like stamped everywhere, is you talk about accounting, legal, and reporting. And from a venture side, that's really crucial so that your investors better understand what they're buying into, what they get. It's regulated, it happens every quarter. They're getting the information they need. But how come that doesn't transfer down to the startups? What is the fear of a startup sharing this information to their investors? Do you have any ways that you work with founders to get them to be more alerted to the fact that this will benefit them to share out and get this off their chest and do it on a regular basis? It seems to be, like I said, when you went into the deep dive in the book, it's like that, I totally agree. I would like every founder to believe this, but where's the shortcomings on this?
I certainly think that founders don't have to be experts at all those different things, but I think that as a CEO of a company, you should have some sort of awareness of how those things work. One of the things that technology has helped and also accelerated is the number of companies that are in the market, where there are so many opportunities now to use experts at discounted prices to help founders set up these structural elements of their company such that they don't have to do that themselves and they can focus on the things that really drive the business. However, it's important to understand how to read a financial statement, what legal entity documents are important, how to lead a team meeting, and how to motivate and lead your employees, like just basic things. There are a lot of technical founders and some people who are really good at just their product or their service, or they're really good at sales. And as companies mature, and we've both seen this, sometimes that person who started the company might stay in that role, and you bring in someone with that skill set who understands all the different elements of a business. When you look at large Fortune 500s or just larger companies, oftentimes the CEO is someone who was the COO, and the COO typically understands and has their hands in every single functional operating part of the company. When I think about that at a venture capital firm, the structural elements of like how people elevate within a firm, they usually start out looking at deals, and they start out partnering and like investing in the deals, or maybe they start out as an analyst and they're doing all different things within a company. Or you might have someone who is a chief of staff or an IR person who understood a certain part of the business. Now they're helping with investments. But I feel like as a GP, we can either A, outsource all of that, or B, just have a general understanding of it so we know what we're getting. And as a founder, I think it's the same thing. One of the things I wanted to also touch on in the book that I hope we don't leave out is the market validation piece. One of the things that I was taught starting out in financial services was trying to get an understanding of, did I have enough market or people that I knew that would support me if I were to transition into this type of business? But a lot of that was, I think, a weeding out process. But it was more important to understand, do I have a market to sell these products? And we do the same thing as VCs. I did the same thing in starting the first fund I ever started. I spent literally 6 months hardcore just talking to people about, does this make sense? Here's the thesis. Here's what we're trying to do. Same thing with Serac Ventures. I went out and talked to a bunch of people before figuring out, should I even launch this? And founders should do the same thing. They should spend time actually talking to their customers. Case study. Here's an example. I was working with a founder and I was talking to this founder about their product and some of the issues that I saw with it, just in practicality, the usage problems. And I said, you're spending a lot of time on this and you've actually raised money on it. Have you actually talked to the end customer to figure out what they want? It's like, oh, I haven't actually done that yet. And I said, you haven't literally went to their office, sat down with them, and collected this data. And that was a huge red flag. But I think that we live in this society where people rely so much on the less face to face sort of information gathering. And I think you're missing something from that. Not that you can't get sufficient information, but the lack of investigation by some people is alarming. And when conducting due diligence, it's important to understand that, not just for me to a founder, but also from an investor looking at Serac Ventures or someone looking at your fund or whoever. So I think that the market validation piece is something that is pointed out in the book that is relevant regardless of the industry.
No, I completely agree with that. They end up building for themselves and not for the problem. They assume this problem, they're building for it, but they haven't built anybody in that really wants to try it or has an interest to solve the problem. And maybe this falls a lot more on venture where or investors, angels, or LPs that they have to do more investigation to ensure that this has merit and has value, and that not everybody's bought into just the idea and the concept, but that there is some form of market validation versus it just being a hunch. And I think to your point, there's a lot of hunches, and people are just going with them because they all feel the same hunch, but they haven't investigated if someone would actually change an entire industry over to work off of this type of product. Or are they too early? Or are they too late? There's probably lots of different ways that that gets structured into that.
Yeah, and again, I always like to think, not, some of this stuff to me is just common sense. And I think founders even know this. It's just a function of knowing something and actually doing something. Like, you have to go out and actually do it. And I'm so glad you said about solving a problem for yourself, and or is this a problem for a greater magnitude of people? Such a good point. I think about that all the time. And one of the ways in conducting due diligence to figure that out is asking a founder, why did you start your company? And if their answer is something like, well, I wanted to go out on my own and build something for my family, or I wanted to do this because I want to be independent. I don't want to have a boss. I'm like, that's an answer, but it's not the right answer. The right answer is, I saw this huge problem out there that needed to be fixed, and I couldn't deal with myself if I didn't stop and try to fix this massive problem. That is a better answer. At least it is for me, but it's indicative of like the why behind people's reason for starting a company.
Agreed. And if you tie in the earlier comment you made, they spent 6 months diving into it to prove that there was a real problem there versus seeing it. Then you've got the full solution that they did all the pre work, they did everything they could, and they're coming back to you and saying, look, I know there's a market here. I've proven it. I went out, I hustled, I found the problem, I found the gap, and my hypothesis was correct. There's a problem. And here's my solution to the problem I came up with.
I was talking to a founder last week, and probably one of the most impressive things I've ever heard. He said he conducted diligence on He had a problem that he thought. He sent out interview requests to 1,000 people, ended up talking to roughly 150 of them, identified and validated a problem, and sold a solution and got customers. Then he went back and built the product. And I'm like, this is to me the best way to build a company is get a customer, then build the problem versus, build a solution and then go out looking for customers. It just showed so much maturity, and I wish more founders would do that.
I love it. Agreed. Well, to kind of wrap up the structure of the book and all the great things that it kind of aligns you to, and I will tell everybody you have to read this because it is a great framework for either starting a company, starting a fund, but it really does help on all fronts. We kind of walk through market validation. You've got accounting, legal reporting, metrics, thesis, and the last one that it kind of really touches is um, two parts to it is expectations. And I think a lot of the time founders will say, well, we're going to do 10 million this year and they haven't even started. Um, and then they have this grasp of these big things and they say, well, venture wants to see this. Well, yeah, sure. But what is its really possibilities? What is the real value? What have you tested to prove that you think you could actually do in numbers? So there's that side of it. What are the expectations? And then what are the roles that venture fits into helping companies, angels, LPs, venture people? What are their roles in helping these companies actually achieve these goals? Like, where do you see that the fit there? Because I think we all want to just be in there helping like crazy, but is that really going to validate and bring value to the founder and to their company? Or, what's the recommendation? What's the best way for my money to be successful? Because I'm literally giving you money like I put in the stock market and I want it to be successful. I want it to make me 10x, 20x, but I really want to make sure there's some validation, but also that there's expectations are met or at least somewhat met. How do you kind of validate through all of that?
I think as VCs, the best thing that we can do for companies is use our experience to provide examples of what works and what doesn't work. We cannot go into every company and operate their company, nor can we be expected to be experts at the things that they're super passionate about. I have a general understanding and sort of deep knowledge of the financial services industry, even the regulatory side of that. So whenever I'm talking to fintech founders and companies that might have some sort of embedded finance component, I'm able to talk to them about that. Consumer behaviors, what's happening on the regulatory front. Does this make sense for customers? They benefit from that interaction, but I can't operate their company. Nobody can do that. Anyone that says that they're doing that, that's unrealistic. I do think that VCs have the ability to provide structural support in areas like marketing. They can do things like recruiting. They can even introduce people to customers or even other investors. I think that what we spend the most time doing is introducing our portfolio companies to other VCs who might want to invest in them, and then scouring our personal networks to introduce them to potential customers. We also have some advisors within our network that will work with our portfolio companies to give them different things. But at the end of the day, the founder has to run the business and they don't have to take our advice. We're just there as another resource. And realistically, we think of ourselves as valuable as like other VCs, meaning we're not the only investor in their company. So we always take the position that we know that they're getting flooded with a lot of advice from other things. So it's just more so acting as an advisor to the portfolio company, not trying to run their company, and then trusting them to make the right decision.
I like that. It's a simple approach, but it's there when they need it. It's an open vault when they choose to come back and get the information, which is super helpful. And I guess in a way, you're saying know your lane. Figure out what your lane is and how you're going to support those companies. Make sure that they know if it's recruiting or if it's advising help, whatever it is. But know your lane so that when they do have a problem, they know who to come with because they've learned that over time through how you've proceeded in your investment with them.
Yeah. Yeah, absolutely. I mean, it's a it's a fun job. I'll tell you, seeing all the different technologies and the ideas. But the biggest thing is just execution. And sometimes the plans work, sometimes they don't. But execution is everything.
I love it. That's a great way to kind of end this segment on execution, because execution, to your point earlier, the person that didn't test the market, their execution was limited. So in this case, execution wins the race. It's the best executors will move the product or fail it. And I've seen guys that, and a gentleman that ran a company, and he literally raised millions of dollars, went out to the market, was testing it, and said, you know what, this isn't working. I can't get anybody to take on it. So instead of spending more money and wasting the time, I'm going to fold the company and give everybody back what's left of the funding. And huge respect for that, because they thought that there was a big problem there. They went after it and they couldn't solve it. So execution was everything in that case. Does that mean in 10 years from now it might be something bigger? For sure. But at least they stuck to their drive and they tried to solve it, and it wouldn't work. So instead of just burning out time for the next 3 4 years, wasting money and time, they decided to, close it up and move on. And I think that that's also a respectful way of looking at how you operate your fiduciary responsibility. Is another way is to give that back and walk away and try something different.
Yeah, I respect that, the maturity to be able to do that. That's huge.
Agreed. Well, now we're going to jump, just before we jump into the 60-second spot. I have to ask this question because I'm a fan. So, is there a chapter? Is there a section of the book that you would move to the front, make it bigger? Or is there a section you would say, you know what, I wish I put this in? When I do version 2 of the book, I'm going to add in this new area, because you've got 7 and 8 years of learning from when you started writing to when you published to where you are today. Is there a section that you would add more to it, or that you would put in a new chapter and say, you know what, I learned a lot about this. I'm going to do a whole subject just on governance and boards. Like, is there something that you would say you would add in? Because, like I said, it's just that continuation of when you put something great out there that you can continue to layer onto it.
I would say that for a fund manager, I would add a chapter or a few chapters about the following. And I learned this from experience over time. The four elements of the four critical areas of running a venture capital firm. That would be like the title of this entire section. It's fundraising, operations, general marketing for the firm, and then working with founders. Those four categories. As a GP, you think, or I guess most people on the outside think that all we do is work with founders. But in running a firm, we're thinking about all four of those areas all the time. Sometimes it's more heavy on fundraising. Sometimes it's more heavy on working with founders. Sometimes it's like you're doing a lot of marketing, like going to conferences and podcasts and things of that sort. And then sometimes you're focusing on streamlining your internal operations. But all those different things have to be working together. And when I wrote that book, I had just raised, that was my first fund. And I was so frustrated with the process of not understanding how to do it and piecing it together that I thought, oh, this could be a good resource for other people. But now, having done that a few times, you understand in running a fund is no different than running a company. There are four functional areas. If you're a founder, your fundraising might be for us, that's sort of our source of capital. That's the thing that we use to actually do business. For a founder, it might be their product. We have to have operations. So does a founder. We have to have marketing and visibility with customers. So does a founder. And then ultimately, we have to have a really good product. And founders to me are not products, but they are the medium by which we attract our investors to the fund. And for an individual company, their product could be some new technology. So I think that I would add to the book the business side of running a venture capital firm to fill that out. I just haven't had the energy to go back and add that in there.
No, that's great. You kind of, if I was to add to your book, I would add in the governance side, but everything else to me was like a great homogenous structure. And if you added in that part you just talked about, which is the fundamentals and the fundraising operations general and the startup founder, I think you just keep building on that. You've got a fantastic how-to book on. Again, you could put founder on it and you could put investor on it and LP, and everybody would have that same kind of general understanding of how this works and what that structure looks like. So I think it's great. So it's a great addition. And thank you for sharing that. So I think next we'll jump into this 60-second rant. So the way this works is you have 60 seconds, you'll rant about anything. I'll hit start, and nobody has ever hit 60 seconds, so no pressure on that. Again, it's to rant about anything. I will try and disagree with your rant. It never works because I'm always a big fan of the rants and I agree with them. So I will share and then you can end it off. But when you're ready, 60 seconds, you're on.
This is an easy one. One of the things that is a pet peeve of mine is when I hear any investor say that they knew that a particular company was going to be a huge success. There's absolutely no way you could know that. And if you knew it, you would put all of your resources into that one company. We are investors. And as an investor, the intelligent thing to do is to construct a portfolio and then manage your best companies. But even then, you still don't know which ones that's going to be. So when I see people taking credit for like these big, massive wins, I think the credit should be like, I didn't know that this company was going to end up like that, but I am pretty confident about our strategy as a firm to create the opportunity for that to happen, but there's no way that anybody could know. So that's my rant. That's my one of my pet peeves.
Well, I like it because you also came in at 60 seconds. So, bam, first person I think that's hit the number right on. So that's awesome. I won't counter it because I do agree with you wholeheartedly that it feels like it's a game of luck. But now, if we take the way that and you talked about this earlier on in the show, is that you said portfolio construction. So when you're investing in the stock market, public markets, you've come up with, I want to be able to go into all these different areas. So telecom, rail, transportation, whatever it might be, AI, all of these areas. And that's the focus of how you're going to generate over the next 10 years. So in a portfolio creation, when it comes to these big hits, it's one, you have to get into these companies at a certain point to be able to have that investment to say you got in there. So somehow you have to figure out how to get in there in the first place. And then secondarily, how it matches up, because if you're only investing in AI companies and this happens to be a CPG company, then what are you doing in that as well? Because it seems that in earlier stage company portfolios, people want you to only invest in a specific segment. It's not that you can just invest in all companies everywhere because nobody can do everything great. So how do you manage all of this? Because I think it is a one-hit wonder, to your point, and you have to just take it as, in honesty, it's just luck, because this isn't a stock market portfolio construction. This is literally a hit and miss, and the risk is so high that the success is very low. But we'll take it as it comes, I guess.
That what I was writing about was how important portfolio construction is, and I illustrate how you can actually invest in too few companies, and you can have a strategy where you invest in too many. And what portfolio construction demonstrates is that you actually have a strategy for actually hitting or increasing the probability of hitting your desired returns. So, again, it's highly debatable the number of companies that people should invest in or what sectors are going to drive that. But I think fundamentally, it's just the framework for how you build a portfolio that matters to investors. And look, they ask about it. They ask about it deeply to make sure you understand it. So that was sort of, I like to focus on that part of it versus saying that I know with 100% certainty that this company is going to be the big winner.
Agreed. And I like that you also threw in there that it's about the returns. At the end result is, I'm building a portfolio that's going to generate bigger returns than you would get if you went to the stock market. So you do have to figure out how you're offsetting the regular 8 to 12% increase on the TSX or the venture or the NASDAQ, et cetera, the Dow. So you have to prove how that's going to be possible through the investments, through the thesis, and through the things you're investing in. So I agree. It all comes back down to the fundamentals. You kind of have to take the lofty throw out there and the Hail Mary toss, because that's what you're going to win with. But you got to try and use the fundamentals that prove why this is going to be a profitable and valuable portfolio.
Absolutely.
I love it. Well, we're almost there. We're going to jump into the rapid fire questions. So the way this works is I will ask you a question. It's either and or, just as the engineering side, pick one or the other. From your perspective as the investor, there are a couple of questions as well, so you can jump on those at the same time. All right, here we go. From your investment thesis and standpoint, would you rather invest in a founder or co-founder?
Founder.
Unicorn or a 4-year 10x exit?
4-year.
AI or blockchain?
AI.
First money in or Series A?
First money in.
Board seat or observer?
Observer.
Safe or convertible note?
Convertible note.
Lead or follow?
Lead.
2 qualities for a startup to stand out to you.
Discipline. Vision.
Verticals of focus in your fund.
Fintech, SaaS, future work.
Love it. Number of companies invested per year.
8 to 10.
Love it even more. Favorite part of investing?
Watching companies progress and grow. That it's not the end outcome, it's the journey of seeing that happen.
I like it. What is the piece of advice you give founders 9 out of 10 times?
Be willing to iterate.
Do you have a philosophy or rules that you stand behind?
Pretty much the same. Take the feedback, use it or not, but just be humble and willing to iterate, because everyone wants the end goal to succeed.
Who is your hero, mentor, and why?
Hero, mentor, it's probably people I've never met, but the first person that comes to mind is Steve Schwartzman, who started BlackRock. I think that's his name. His story of hustle and grit and drive and determination, it's very motivating to me. I appreciate his book.
I like it. What line do you find you share to investors over and over?
People who are investing into Serac Ventures, that there's opportunity everywhere, and it's often found in places where people aren't looking.
I like it. Now, this is a 2-part question. You don't have to use names, but choose what's best. What is your worst investment and your favorite investment? Or the same?
I think the worst investment are founders who keep coming back to the pot for more money without a specific strategy on how they're going to use that. I've seen that happen so many times and they never turned out well. The best investments are founders who try to maximize what they're doing on the least amount of money.
Great advice. Do you have any references to podcasts or other areas that you collect information from that you think would be useful to founders or investors?
I'm less of a listener and more of a reader. I read about 2 books a month. I try to read one book that's more like professional development, and then another book that's about biographies about other people who started companies. There's so many good ones. Like I read Richard Branson's story, Steve Schwarzman's story, Phil Knight at Nike. I've read all these different books, and then I'll try to read a book about business. I think that if you think about your time of learning as one for personal growth and one for people you want to be like, I think that's a good way to structure your education.
I love it. The same. I love ripping through books. I'm a big fan. So I won't ask you what, well, maybe I will. What's your favorite book? We'll go to the personal questions now. Favorite book?
Man, I still think that one of the best books I've ever read is Shoe Dog by Phil Knight. Um, I also like Good to Great. It sat on my shelf for 10 years and I didn't read it thinking that I don't really care about this book. But then I finally read it. It was really one of those books. But then I read another book recently called Buy Back Your Time by Dan Martell. Phenomenal book. Then I read, is it Greg McCohen who wrote Essentialism? Phenomenal book. Um, I'm just looking at my bookshelf. So many, Richard Branson's book about how he built Version and the multi-company approach. Super interesting. But you learn from just reading the biographies of these people. And there's some personal thing. What's his name? Glenn Stearns, who he was on this show called Undercover Billionaire, and he built a massive lending company that went through all the GFC and all those different things. Incredible story. I could go on and on.
I love it. These are very valuable. I love it. Big fan of, I've read a few of those, but now I've got more to read. So I'm going to get on those too. Um, Favorite sports team?
Oklahoma City Thunder, obviously.
Yeah, they are pretty good. Favorite movie and what character would you play?
Man, it's maybe because of this recency bias. My favorite movie is Born Supremacy, the series. I've always had an undercover desire to work for the CIA in some sort of covert op. So I'm really good at keeping secrets. I'm super disciplined, and I can endure a lot of pain.
We'll cut this snippet off and send it over to the
Yeah.
FBI or something and see if we can get you in there. I love it. No, I'm a big fan. I rewatched that about probably during COVID. I remember rewatching the whole series. So I agree, it's pretty
It's
sick.
so good.
Yeah. Cake or fortune cookie?
Cake.
Superman or Batman?
Superman.
DC or Marvel?
Definitely Marvel. Come on.
Well, you did pick Superman, so
I know that's a little bit of a juxtaposition.
yeah, that's our nerds coming out right now, but I'm just
Right?
gonna let it slide. Yeah. So, football or football?
Oh, definitely football.
I like
It's
it.
an
All right.
international game. Come on.
Agreed. Agreed. Elon Musk or Oprah Winfrey?
Oprah, because she's a pacifier.
And Elon's everywhere now. Like pretty soon he's going to be on the cereal box and he's going to be in my house hanging out. It's crazy how much this guy's moving around. All right, Big Mac or Chicken McNuggets?
McNuggets.
I like it. All right, we're down to the wire. What is your superpower?
My superpower, like hidden talent, things that people don't know about me. When I was in college, I used to cut hair, and I did that as like a side business. I started doing it when I was 15, and just kept doing it. And bought my wife's first wedding ring from my savings from that business. I also speak fluent Spanish. Not a lot of people know that about me either. I
Ah, very cool.
study it every day. I think it's fun. I talk to people. I don't get to use it much in my work, but I enjoy it. And I wouldn't call it a superpower, but it does take a lot of discipline to maintain it.
That's brilliant. And I'm glad that you brought that up so that we could end the segment with knowing your superpower, but also knowing one thing about you that nobody would know. So that's brilliant. And I'm going to say, Kevin, it's been an honor and a pleasure to not only get to know you and hang out with you in the Middle East, but to be sitting here today and going through your book and going through everything about yourself and the way you look at things. I could say your superpower also on top of that is you're good with people, and you're certainly sharp, and you can share a lot of value. So it's been a real pleasure getting to talk with you today, and thank you for sharing to the audience.
It's a pleasure to be here. Thank you so much, JP.
Well, the way we like to end our show is we leave you with the last word. So anything that you want to share to the investors or to the startups, I turn it over to you. Please share how people can get a hold of you. But again, thanks a lot for joining.
The easiest way to get a hold of me is on LinkedIn. I answer messages frequently on there, or just submitting your information on the Serac website if you're a founder. And maybe last word is ventures going through a cycle at the moment. And these cycles are important because they are rejuvenatory periods for the industry. And if you look back on history, these cycles are when you find the most opportunity. So if you're building something, stay gritty, keep fighting through it, because there's going to come a point when this cycle is over. So this is a momentous point in history.
Well shared, my friend. That's awesome. Thank you.
Cool. My pleasure.
Next episode, we're joined by the amazing Engel Jones. Stay tuned.
Yeah, I'm a coach as well, right? So I'm a coach, and the podcast has helped me to be a very good coach based on not just saying that you should go after your goals, but showing that I've gone after goals and achieved them.